Hello, good afternoon, everybody. How are you all? And I am in Bloomington, Minnesota today. The weather is just great. And it is a weather that we should do this webinar outside of the office. And here I am. And today we have a topic that is going to last for 2 sessions. And Catherine got some calls from you, and the folks are interested in tax planning for 2022. So every time I think about this topic, it kind of it gives me 2 very distinct different sections that I need to address, because obviously tax planning is always different because the year is different, the tax tax rules and regulations changes, a new implementation. Like just right now we have this Inflation Reduction Act, and what is the impact, right? So these are temporary, practical tax planning we need to do, but we also need to understand this fundamental of tax planning, which is ongoing regardless who is president, regardless who is in the White House, but you need to understand. And it is what we call the 3-dimensional tax planning techniques. Not something I'm going to give you like a cookie cutter and you use it and you're gonna be the winner. No, it is something that I need to explain to you so you follow my thought and then you implement it yourself or with your tax preparer. And if not yourself and not your tax preparer, you absolutely should come to Community CPA to get that implemented. So let me start this whole conversation by bragging about ourselves. And you're here because you heard about Community CPA. You're looking at our website. And we have this website. You can come on and do communitycpa.com, coming to see what's in here. And we normally would post what we talk about on the webinars. And we, we also have the portal login for our client. Then if you come to YouTube channel, folks, that has all of these videos you are watching right now. Like I finished talking today, and Catherine will post the videos onto YouTube. And it is all there for many years already. So I have over 600 videos out there. And if you just go into this magnifying glasses and type into the topic you want to search, for example, ERC, if you happen to know what that is, and I want you to know more about it, and you come over here, it will bring all the ERC webinars we have done for you throughout the time. And you really want to look at the timestamp on there to see how old they are. Make sure you pick the relevant one, right? So this is the library we provided for folks like you to learn on your own. And then when you have questions, you can bring in really pointed questions, and you no longer need to second guess what you're asking, and because you already know. All right, so now let's go to our webinar content, and I'll bring up the slides with you. So this is our tax planning 2022 part 1. And obviously this particular planning techniques we teach right here, it is an invention of our experience. Obviously, we go by the rules, right? You have tax regulations and you have tax code, and then you also have professional conduct regulated by AICPA, regulated by the state. We are the CPA firm. And with all of that considered, and this is an invention because we put the knowledge that you don't have in one place, and to put your thinking, instead of thinking of tax planning, tax saving, every one of you would tell me that, oh yeah, I know how to save taxes. I'm just gonna document all of our expenditures. If I drink a cup of coffee, I'm going to write down the portion that client was drinking and I paid for them. That's my business expense. That is all good and dandy, and I think you are dedicated to track your expense. Is a good habit you have. Continue that route, right? However, is really going to save you taxes with 1 cup of coffee deduction? Maybe you're saying is no, yin, what are you talking about? I know that doesn't do much, and I really did make money. I made money and I need to pay taxes. I understand. I'm just here asking you, is there other ways to legitimately, properly be smart about taxes, delay taxes, defer the pay, and is it possible? The answer is absolutely possible. That's why this is what we are teaching you today. All right, and let's just talk about me. I know every time I got on webinars on Saturday, I see a lot of you are new. Not every one of you know about me, and so let me just tell you about me. And I serve on the National Taxpayer Advocacy Panel. This is a federal appointed advisory committee to IRS. So what that says is there's certain scrutinies going on, and they would bring you to the committee, and you work with other committee members to bring recommendation to IRS to make the agency taxpayer first. And I always say that before I joined the committee, I'll tell you that even though I practiced in the tax field for 20 some years already, but before I joined the committee, I have lesser understanding of how IRS is running their business. I may know all the things outside of IRS and helping my tax preparers, but the understanding about IRS agency at itself, it is really gained through these participations. And I will tell you that I have learned a ton. I have learned a ton. I also had a lot more patience with whatever IRS is out there trying to accomplish, because it is a huge machine. And when we have an issue towards to our own case, you always think it's too slow, it's not fast enough, but just knowing that there are ways to work it out. And if you owe IRS money, it is million times better than you owe some banks money. And if you have a deal you want to work out with IRS, I'll tell you it's much more orderly. It is possible to work through IRS system to get that deal. And with that, and I bragged about my participation with TAP, Taxpayer Advocacy Panel, and I also have a book on the internet. I'll tell you, I start gaining momentum on the internet for this book. There's a lot of people now buying this book on the internet because it says exactly what they need to do when they start a business. I had so many people are coming to me and telling me that, oh, I read your book, I'm from Land of Heart. And I knew what I need to do now with the book you wrote. So folks, if you think of starting up a business, or you have a friend who wants to start up a business, I mean, this book, $15 on the internet, that doesn't cost a ton, but it does give you all the knowledge you need. I wrote stories in there. That's not a boring book. It is a book will make you cry. Book will make you happy because you find the hero. You also find stories that you don't want to repeat. So obviously I'm advertising for the book, but the book deserves it. I wrote that in 2019. I'm writing the second one, almost done, and it will go out this year. That is called Appointment with Ying at 10 a.m. That one is growing your business. I do have a tough time to write that one because I felt that I haven't really done growing my business, which is Community CPA yet. And I felt like I always have a chapter to continue. So that was the reason why I'm on this path. But my third book is Appointment with Ying at 2 p.m. That book will talk about merger and acquisition. If you are on the same wavelength in terms of developing your business, just follow my book because it will give you the 2 p.m. merger and acquisition. 6 p.m. is my fourth book, which is retiring from your business. It is really a journey of a business. It's not so much of a textbook, but it's an entrepreneur's journey of a business, teach you how to maneuver every stage. All right, everything we do here, no responsibility and a disclaimer. And this is one that to make sure, and we of course we do good job to make sure our content is relevant, is correct, is accurate, but there is also understandings of content, the interpretation of we have And that is a responsibility of you viewers instead of a responsibility of us. And if you do need us to put our stamp on your solution, then obviously to sign up with us and do a professional service agreement, that is how you can secure what you are doing. But just doing internet learning normally, that doesn't give you that guarantee, right? All right. This is a chart I drew with my hand, and it is not pretty. It doesn't look good, but I want you to have that down to earth touch from us, because I am a real person, and my videos is not perfect, but we try to make that connection through these imperfections to have you understand we are real people, real knowledge. We connected with you. I drew this chart a million times in my in-person webinars or in my online talking, just because I drew that. I love to be an artist, but I'm not. And here, this is a box, right? 3D box. And when you are saving taxes, what your tax preparer normally tell you, they normally say to you that, you need to spend more money. And what do? You spend more money. So you spend $100, save $2, $20, right? So this box tells you that tax planning is not horizontal, is not flat. It is actually 3D, three-dimensional. So why is three-dimensional? We have fiscal year as one consideration. Then we have accounting method as another consideration. Then we have tax structure as our third consideration. And I actually will go through each of these considerations with you, and to make you understand why do I need to know it by three-dimensional, why it is not just I spend money and save money. So let's go for that. And accounting method, this is our number one. Our number two, we're going to talk about calendar year versus fiscal year. The last one, we're going to talk about tax structure. This is the three-dimensional I was talking about, right? So accounting method, folks, what do you know about accounting method? I don't meant for you to read this at all, because this is really textbook content. And look at my 3 slides. This is a summary. You can literally take picture of it, or you can go back to the YouTube, find my webinar, and roll it into here, take a picture. So there's nothing you need to do, folks. You just need to be with me right now. Hear me. Accounting method is simply a way to calculate your gain in different ways. So do you just make money from your sales minus your expense, you got a profit? Is that the only way you calculate profit? No, there's other ways to calculate profit. I can tell you there's a accrual method, there's a cash method, there's also mark to market. There's so many ways, right? Hybrid ways to do it. There's different way of accounting. But every time you change your accounting method, it is IRS's job to know it. You cannot say that, oh, I'm a cash accountant, I'm doing cash method. Next year, I like to be accrual. The year after, maybe mark to market. No, you cannot do that. Every accounting method change, it is a change, almost like, if I have to use analogy, it is almost like a change of your outfit. And you want to look like, you want to look certain ways, and then you need to be certain ways forever. You want to dress, if you're a girl, you want to dress up like a boy, and you need to dress up like a boy. So that's the dress code that you always go by. So if you are cash accounting, you're cash accounting. What is cash accounting? Cash accounting means if you got income landed on your bank, you got that income. And if you got income, it didn't land on your bank. Do you need to count that income, even though someone said that, yeah, I already sent that to you, and I sent that to you on December 28th, 2022. How come you didn't get it? I'm pretty sure you're going to get it in January the 1st, 2nd, 3rd. I'm cash accounting. What does that mean? I don't have to count that income. I don't have to count that income until I see it, until it's in my bank. So you can imagine that if you are on cash accounting, Everything you receive, you count as income. Everything you spent, you count as expense. But what if you wrote a check to buy these things, but they didn't cash it? The vendor you were buying things from, they did not cash your money, and you did not have that money go away from your bank. That just means that you cannot deduct it. It is cash based, right? So cash accounting means that. Means you see it as real, you don't see it, it didn't exist. So cash accounting basically is your bank register. That is why sometimes when we deal with small business and they will say that, oh, the bank wants my financial statement, they're asking me for cash flow statement. I am like, okay, are you cash accounting? They go, oh, I don't know what that means. And okay, let's look at your tax return, see whether that's marked as cash accounting or not. And if it is cash accounting, you just tell your banker that go look at your bank register. That's your cash flow statement. All right. So then, of course, now you probably ask me, oh, I am a grocery store. Is it good to be on cash base or be on accrual? So before I answer that question, let's just briefly describe what is accrual accounting. Accrual means that you can bring something that you haven't even made and you haven't spent into your financial statement. So for example, and if you bought inventory, you bought your Christmas shops kind of store at the month of December, your sales gonna go over the roof, so you ordered a lot of inventory. And you told the vendor that I am going to do net 30 days, so I have 30 days to pay you. And you ordered on December 5th and you pay on January the 5th, right? And if you are on accrual accounting, whatever you order, because you already have a payable of that amount, and you already count as expense on your book, so it is reducing your income. But what if you are on cash accounting? And you can reduce your income, can you? Because it is coming out in January. So with a store, with a situation like that, you clearly know it is better which way. And for a retail store, is different from a dental office. These are the two businesses I use the most to describe what accounting method you should use. And for a dental office, after they service you with a dental service, they fill up the insurance company information. They submit to the insurance company for payment. The insurance company takes 60 days to get back to them. So you got your teeth cleaned, and they put in $100 to the insurance company to get reimbursed. The insurance company has all kind of discount, so they only give them $89 back 2 months later. So for dental office, most of them are on cash accounting because they want to count only when the insurance company deposit the money. Not only that's the best practice, it's also easier. Otherwise, what are you going to do? You are going to do receivable for $100, and when you receive the money is $89, so you need to figure out the $11 to write off. And so you already submitted your income to IRS for $100, and then next year you go, I need to reduce $11 because that $100 I didn't really pay in full, right? It's a lot of work. It's doable, but it's a lot of work. So most of the dental offices would just do cash method, and whatever deposit to my bank, that's what I got paid. That's what I'm going to pay in taxes on. So good practice. For most of the grocery store, what you would do? You would do accrual method. Why? Because on the income side, do you have customer who come to shop at your store and would say that I'm not going to pay you, 60 days later, and I'm just going to have the beef steak first, and then I pay you later? That doesn't happen, right? They come in, they buy, they pay you, and your income is always in practical ways. Your income is cash method. You always get your income the way you get it, right? But the expense is different. You always want it to be accrued because you always want to write off your expense already even before you pay for it. So what's the point to put yourself on cash method? You should be accrued. So with that said, you see accounting method is important. When you set up a business, are you going to let your folks and without even checking with you to decide on what method you're going to be? No, that's your number one question. What accounting method am I going to be on? There's a lot of stock traders out there, day traders, and when they start doing the day trading, they never thought about accounting method. And then after they lost a couple of dollars and noticed that they can only deduct $3,000 a year out of $3 million they lost, they suddenly realize that, oh, my accounting method is not right. Let's do mark to market. So accounting method, that should be your number one consideration when you get into the business. So that is one dimension, right? We had a three-dimensional. The first dimension is the accounting method. The second one is what? The second one is calendar year versus a fiscal year. So this is the third slide related to accounting method, folks. So this is our second dimension. Now, let's talk about a year. In the tax world, 12 months is the thing. You do 12 months cutoff. You either cut yourself off from January to December, or from February to January, or from March to April, and however you pick it, right? So you probably sit there and go, I never heard of it, because our tax is always due in April, it's always ended in December. What do you mean by that? What I mean by saying is individuals, people like us, you, me, and others, and we are an entity. That's why we have our social security number. You mean social security number is what? Social security number representing a entity. So I'm an entity, and Dr. Howe is entity. So everybody is an entity, and inside of this entity, and you need to decide how you report your loss and gains, right? And of course, for the personal 1040, we are all on cash. We are all on cash. And we are all January to December animals, right? But in business is different. Business could have their peak season. And for example, with agriculture company, and when do they end their year and to be the most advantage? So let me explain this further. Pretend we're using the Christmas store as example. So Christmas store, they sell heavily in November, December. Am I right? You say right. Yes. And after you sell in November, December, and at the end of December, don't you make the most money at that end of the month? Because December stuff doesn't sell in January. Christmas thing is over, it's over. So you already push out all your year-end sale after Christmas, and by 31st of December, you emptied all your inventory already for the year. You made the big buck at that time. Imagine if your business just ends on that day. Don't you have the most income ever to report to IRS? Yes. And don't you pay the most taxes to IRS? You pick the most easy time to pay taxes, because calculating taxes, you pay 50,000, you go, yeah, I do have 50,000 in my bank, let's just pay it, right? So yeah, you can pay big bucks and pay it quick, but January come all the way to November, you're struggling. Then you call your accountant and goes, I don't know what I'm doing wrong, and the whole year, I only make money for IRS because I paid all to IRS. And after I paid IRS, you know what? I have nothing left. So that is the issue with your year. And maybe your year should start on November 1st, should end on October 31st, right? And imagine if that's the case. So you buy and you sell and you make money and you spend, and you didn't really bother to pay taxes until October. Wouldn't that be better? Of course, I know you're nodding your head. You go, yeah, right. How come I never thought about it? And this is again, when we do tax planning, sometimes we spot opportunities. Let's say you already run your business a couple of years. Now you have this realization, oh, I should be this way. Not a problem. We can apply to IRS and to change our year. And then you file a short year, then you file a normal, different fiscal year. Okay. And then this is the difference between calendar year and the fiscal year. Now you understand why fiscal year is a thing, because it has a strong relation to your operation. Some people have multiple companies and they're all the same. They're all LLCs and they're all January to December. So they're just repeating their business like having twins and triplets, quadruplets, and they just do the same thing. And is life really gonna be fun if you have the same babies and just copying each other? You have, yeah, you may be, of course babies are fun, but I am saying that you lack of variety. And your company should never be the cookie cutter company. You should consider years. What is your 12 months? Is it from November to October, or maybe from December to November? So that's the consideration. Then consider what accounting method is best for you. Is that really just cash method? And let me tell you this, if you never choose what accounting method you were in, you are automatically defaulted to cash. And those, there are tax preparers out there, I'll tell you. I am not saying all of them are that way, but there are a lot of them are that way. They think they know how to use computers, so they think they're tax preparer. Have you ever met one like that? And they prepare taxes because computer tell them what to do, so they think they know it. But if you don't know where to look, the system, every computer software for taxes, the system default on cash method. And the system default on January to December. And you cannot fault the developers to do that because majority of us don't know anything better. And we just let the system drive our life. Didn't we let computer drive our life? Of course we do, but you want to know your choice. It's almost like when you work with IRS, you want to know your taxpayers' right. And you want to know that the system can do things for you when you know what to choose. So now let's get into the third one, right? Three-dimensional box I was drawing. So number one was method. Number two was the year, fiscal year versus calendar year. Number three is what we call tax structures. Tax structures, what is tax structures? Every time we talk about company formation, a lot of people think that's legal thing. And they don't think of that's tax thing. And I, being a CPA and practicing as a public accountant, I will tell you, if you utter the word of formation, I think of tax structure. I don't automatically go to legal because I'm not a lawyer and I don't know what they're thinking. I think I know what they're thinking, but they think differently than I think. So here, I want to spend these few minutes with you to get you to understand tax structures. So in US, these are regular structures, regular citizens. If you're not Elon Musk and you're not Donald Trump, and you probably just need to know these ones, okay? And these are the majority successful small business owners would use. So number one is sole proprietorship. Number two is limited liability, partnership or company. S Corp, C Corp, then what? Not for profit organizations. So these are structures that people are using. And, and another way to kind of articulate what means structure. Structure also means that you are choosing your house. like you want to get married, so you want to start a business. Use that analogy, okay? Making a decision, getting married, and depends on how two of you were thinking about family. You may be buying a single home, you may be buying a condo, you may be buying a semi-detached, and you may be buying an apartment complex, and you're going to be renting everything out, and you may be buying a house with a detached garage, right? So these are different choices of homes. So in business, when you form a business, you are literally choosing that style. You're choosing what your home looks like. So as a sole proprietorship, I want to say that sole proprietorship is a best way for you to test the water and to know that, okay, I want to do business. And the reason I say that is when you are sole proprietor, you don't need to go to the lawyer to form any structures, and you just use your name, use your social security number, and you started business. And we have a successful business owner who were sole proprietor. Okay, what they do is they make prosciutto meat at home in the basement, and they are making it for themselves in the very beginning, and slowly the friends want it, relative wants it, and neighbors want it. So they start selling it. As a sole proprietor, they just make it seasonally and they're selling it to the neighbors, and things are going. And with that realization, then later on a company was formed, because as a sole proprietor, that's only how much you can do. If you made money, if you made more than $25,000 net profit, that is my threshold for you. If you start a sole proprietorship and you are making more than $25,000 in net profit, you need to become a company. And this is where the tax become heavier, unnecessarily high, and you are paying both income tax and self-employment tax, and you are growing, but your tax structure is not fitting. And it's almost like you have 9 children in the family, but you want to rent an apartment. No. So you need a company. So your structure needs to change. So that is the threshold for sole proprietorship, and you start. There's a benefit to it, and when you make money, you need to move on. So in relation to LLC and LLP, these are partnership, right? And if you just have an LLC under your personal name and you are defaulted back to sole proprietor, one thing you gain by making a single member LLC, you are just gaining that legal protection the lawyer was talking about. But in tax world, you are acting like a sole proprietor. You're paying sole proprietor taxes. You are no different than anyone who is sole proprietor, other than your company has an LLC behind it, and that's more of a business risk than the legal side of things the attorney was talking about. So LLC, LLP really is a partnership. When you have this partnership, what do you do? And the partnership in here, that's where the complexity comes. So some partners are working partner, some partners are just investing. So the tax treatment to the working partners are exactly the same as a sole proprietorship. So from tax standpoint, that doesn't save you, okay? And if you are looking at making more than $25,000 on net profit, and you are a LLC, you are active partner to it, you're paying the same high taxes like we were trying to not to pay. So if you do have more than $25,000 profit, and your choice is going to S corporation, C corporation, and to start a corporation. All right, so now you see how the money drives what you can become. That doesn't mean that every time you make more money, you have to go to your lawyers and redo your company. No. There is a process called election. The election is not like the real election we experience, and the fraud and not fraud, fake and not fake. This election is simple and straightforward. We just do it with IRS, and you elect it. And if it is an election to the future years, IRS automatically approve that. Okay. But if you elect backwards, like right now we're in 2022, already in the month of September, and you are like, oh, after I hear you, I'm going to do election, and I want to elect back to January the 1st, 2022. If you do that, it is doable. Good news. IRS allow you to do that, but there is a provision you need to reference in order IRS to do that for you. Okay, so you can file election to make yourself change from LLC to S corp, and change from LLC to C corp, or change from C corp to S corp, or S corp revoke the status, become C corp. All of these things I was talking about, you don't need to change your EIN number, you don't need to change your ownership, and you can just do it the way I described. It is literally a piece of paper and you file election. So I want to show you this map. This is the map that I give to my folks who come to see me at the webinar, and it is all inclusive. It is so it summarizes up everything that you need to know, folks. Okay, and this one. So you can see that map. So this you can see the LLC as a multi-member, right? And that's a multi-member LLC. You see that dotted line on there, and that is the S corp C corp. That means the LLC can go to be elected as S corp and C corp. So those dotted lines just mean that you can elect them to be a certain way. And then you can look at the other boxes and to understand how I drew them out. And then the S corp, you see, can be revoked back into a C corp. So it's changeable. Then based on the multi-member LLC and S corp, your K1 are going into your 1040. You see that, right? And you see on the 1040, there's Schedule C and LLC single member. They're the same. This is why I'm telling you that your Schedule C sole proprietorship and the LLC are really the same. And then with that, and you also see that the LLC single member and can become other ways for tax purposes. So it can be elected to be a C corp, S corp, and so you can make that. You can definitely make this choice by simply electing. You can also elect that to be a multi-member LLC. So that way you file 1065 as a partnership return. So this LLC, single member LLC, don't waste it. If you already have it, know that you can transform yourself into other ways. But what about the C corp and nonprofit? That's on the bottom side of it. So C corp can revoke or can be elected to be S corp, and your nonprofit. If you set up a nonprofit, you can donate money to your nonprofit, and when you donate, you got a deduction, right? And your nonprofit could, if you work for the nonprofit, you can get a W-2 income. So that's the only connection the nonprofit would have for you. And if the income, if you want to make money, and then nonprofit can run W-2 up to you, and the C corp can run W-2 and a 1099 dividend up to you. And the LLC, multi-member, and S corporation, they run K1 to you. So that's essentially the relationship chart that I give you for your tax structure. So I hope this will really give you a overall view. And this is the chart. I have seen a lot of people sending this chart back to me and with questions, because I know it is out there on the internet. People are using it to really understand how the entity can can elect to be the other entity. Like I said, the election is really about the tax treatment. So it is a filing that with IRS, most of the state follows what IRS is doing. So if you elect to be S corporation, your state will be S corporation filing as well. So that part, it is straightforward. It's not any other complexity would play into. There's pretty straightforward on here. So now this is the 3 areas I was going to talk to you about today, folks. and you understand accounting method now, right? You also understand the year, the 12 months period. It's not a magical January to December. It is really about which 12 months you choose. And of course, it is easier when you start a business, you already knew it. But if not, remember I said that everything can change. You can change your accounting method. You can file to change your calendar year and to fiscal year. And here, with tax structures, you can also change with the magic word of election. So with that, and you know you have so much options. And when you come to Community CPA to do your year-end tax planning, you're not just dealing with things that happens in 2022. You're dealing with changes in your business because your business is growing. It's a growing baby. They don't stay as an infant all the time. Your business goes through just like a children. They go through teenager years, college years, become adult. Your business do that too. So when your business changes, the three-dimensional tax thinking I give you, that need to be rethought through. So when you do tax planning with us, we do these three things for you first. Then we go to what's specifically for you for 2022. And there is a part 2 webinar that we want you to attend. In the part 2, what we are going to focus on just with 2022. There's a lot of changes coming in 2022, folks, because pandemic is officially over, okay? And in the past few years, we got used to it, don't we? And you've got bigger child tax credit, you got bigger earned income tax credit, you got bigger monies in 2020, 2021, 2020, 2021. So now 2022 is going to be over. When we file 2022 tax return in 2023, folks, don't be surprised. You will not have the same credit, same refund like you had in 2021 when we filed your 2021 return. So that is a change, and we are going to lay it out for you from personal all the way to business, so we know what is changing in 2022. You know, that is so beneficial for us, because if I don't tell you what is changing and I just do your taxes, and you're gonna be like, okay, Ying, why is my taxes so little this year? Why am I paying so much taxes? Why I got a less refund? And you're going to have questions. But if I tell you what's going on, you're not surprised, and I don't have to go to explain what the White House is doing, you know, what those legislatures are doing, and you know that it's different, okay? And also, we're going to talk about what Inflation Reduction Act is doing to us, okay? So that it will be our part 2. So I welcome you back again on Saturday. We're going to talk about the part 2 of tax planning for 2022. But today's content is critical. It is something that you got to make that into your own knowledge, so you won't become the person who buys truck every year to save taxes. Oh yeah, I have a doctor who literally used the tax dollars to save taxes. He buys trucks every year. So he got all kind of different version of Ford 150. And with that, I hope you don't do that. There's no need to do that. You have other ways to save taxes by looking at the three-dimensional tax ideas and see what fit you. All right, folks. And I hope you enjoyed our webinar. And this is our contact information. And remember, when you go to our YouTube channel, and promise me you subscribe to our channel so you always know what is talked about, and you know us. And if you cannot make 3 p.m., I know we have live and at 3 p.m. and we're always showing up at 3. And some folks said that, Ying, can you change that to 6? It's better for me because I can never make 3 p.m. It's okay, because that webinar will be on YouTube. You can always get it. But subscribe to our channel will make you, will tell you what we talked about, so you will know what to look in our YouTube channel, right? And also, to make us more known to other people who have the similar struggle as you, who doesn't have the resources to look for help elsewhere, and send our link to your friends and the relatives, have them join our webinar, or give us a thumb up, because the thumb up really does a lot of things in the computer world. When you give us thumb up, we actually would get more promotion from YouTube channel, and they will know that, ooh, folks like her, and so they will put our video to in front of the lines. We actually have some video go viral, and we have a pretty solid subscribership, but I still need your help. Please subscribe, thumb up, and I will see you again on Tuesday, 3 p.m. and Saturday, 3 p.m. Bye-bye.